Hi, I'm Brooke Thackray. I'm out here riding today with my friend Keith Richards from Value Trend. We're just talking about the markets, what's going on. Lots of stuff happening. We're seeing a market with very poor breadth right now, and we're going to talk some seasonals today. We're going to talk some sentiment. We're going to talk a bunch of stuff and just get an update on the overall markets. I'm going to pass you over to Keith right now.
Hey, Brooke. So yeah, it's a beautiful day, and we're on our bikes. So despite the maybe concerns that people have about the markets right now, given the poor breadth and stuff, and I guess we'll talk about that in a minute, there's not a lot to complain about when you're riding your bike on a nice day like this, is there?
This is totally awesome. It's amazing weather out, absolutely beautiful. And I just wish the markets were the same.
Yeah, so let's talk about seasonals, Brooke, because you know you're the seasonal guy. Actually, that's how we met probably 20 years ago. I sent you a letter or something like that before internet was invented, and asked you about your seasonal perspectives on things. So let's start that question again from 20 years ago. So what's your outlook on seasonals for the next couple months?
Well, on a seasonal basis right now, it's not very good coming up. We've had some good times in the market recently for the S&P 500. I want to qualify that because the S&P 500 has done really well, but that's a few stocks, not the TSX. So the TSX is actually down since May. So it's hasn't been strong all the way around. But right now we're coming up to time period where the seasonals actually start to get weak. So it's something to watch out for.
So Brooke, I got to ask you a question right now. Talking about breadth, and you know, I complain a lot about the poor breadth we've had, as I think anybody involved with technical analysis has made that observation. But I have noticed, and I'm sure you have too, that breadth is beginning to improve. If you look at sort of the recent movements, and I'm talking just 2-3 weeks, not too long, where there has been some strength emerging in some of the other sectors, whereas if you drew a sector strength chart on stock charts, even just going back 3 months ago, it was basically one big bar on technology and everything else was like this high. So what is your take on that?
So we had such a narrow market. I know I did some writings and I talked about the Magnificent Seven. 7 stocks carrying the S&P 500.
Yeah.
And everybody's looking at those 7 stocks. And you're absolutely right. We have seen some broadening out of that, which is positive. There's no question. But we were so narrow before. Absolutely so narrow. It couldn't keep up with 7 stocks driving the market forever. So it's positive, but we still need to see a lot more breadth in the market than what we've had so far.
Yeah, that's my view exactly, is that it's a good start, but it's like the first month of school for a kid who's always failed. And just because he gets one test that he passes doesn't mean that he's necessarily going to pass the course.
Yeah, I mean, positive signs, yeah, absolutely. But, you know, it's still, relative to historical standards, it's still extremely narrow right now.
Yes, it is. It is. When we talk about breadth, you know, yes, you're right. We're a little early to suppose that we're entering into a new era of, you know, broadening markets, but there are still some sectors from a seasonal perspective that the technicals seem to be lining up with too. So all hope is not lost for investors. It doesn't necessarily mean that we should all be running and hiding in cash. So maybe, Brooke, what's hot over the next couple of months, even in a broad market period of seasonal weakness?
So yeah, if we take a look at some of the sectors that come up right now, we're coming up, first of all, to what I call the danger zone. I just want to talk about the broad markets first. I know you asked me about that a little bit earlier. As you were making me climb a hill, I was losing my breath. But the danger zone is August and September are the 2 worst months of the year historically on a seasonal basis. And you know, it doesn't mean the market's going to go down that time period. It just means that on average, this is the worst time for the stock market. Now, sure, if Powell pivots or something happens like that, the stock market can rally. But typically the market doesn't rally in the next couple months unless we're coming out of a recession. We're not coming out of a recession right now. Okay? Yeah. We may be heading into one, but we're not coming out of one.
Yeah, that's for sure.
So yeah, so this is the backdrop that we're in right now. So there's not a lot of sectors that have strong seasonal profiles at this time, but there are some places you can invest. And one of them would be gold. I think that gold has a strong seasonal period at this time, starting really mid-July into early October. It's been a little bit of a laggard this year. There's a lot going on. Interest rates have come down. But there are some tailwinds or headwinds that could be switching to tailwinds as well right now that could help gold beyond its seasonal period. Now, the reason why gold tends to perform well this time is, first of all, you get an influx of demand in the fall time, which translates back into increased demand for gold coming into autumn. So that tends to give the market a boost. You tend to have interest rates a bit lower. Volatility tends to pick up. So a lot of positive things for gold. So I think gold could be a good trade this year.
Well, absolutely. And the other thing that I actually mentioned this on a video that I did on my end recently. We have a fairly flat-looking U.S. dollar. Like the U.S. dollar fell.
Yeah.
And
absolutely.
now it's kind of treading water sideways, and that can be good for gold because there's a negative correlation between gold and the U.S. dollar. If U.S. dollar's strong, gold tends to be weak, and vice versa. So this maybe gives another impetus to your seasonal observations, would you say?
Absolutely, I totally agree. If you take a look right now with the U.S. dollar, we did see, last week we saw the U.S. dollar go down quite a bit, actually.
Yeah, that's right, yeah.
Just, the floor just sort of fell out from underneath it.
Yeah.
It's actually come down to a level of support internationally. It's
It is.
below the 100 on the Dixie.
Yeah.
So if we see the U.S. dollar weaken at this point, then that would actually be another support for gold to move higher. Coming up over the next couple of months.
Yeah, I mean, honestly, even if it just trades sideways, that's still not a strong U.S. dollar. That's just a meandering dollar, and that can add to the reason why people might, seek refuge in gold. So, absolutely, the technicals line up, the seasonals line up. So that is one trade. Let me ask you something. What do you think right now of the bond market?
Okay. I'm going to hope we're in that picture.
I have no idea. I couldn't see. I can see it's just a black screen.
I don't know who's. I can't see either with my sunglasses.
Yeah, it's a black
so I hope
screen.
we're in there. It'll just be a beautiful scenery. Just be
Turn it the wrong way.
Look at that tree. Beautiful tree.
All right, so bonds.
So the bond market right now, actually, it hasn't been doing that well recently. We've had a lot of impetus for the 10-year yield to move up. We saw the 10-year yield go above 4% just recently, a couple weeks ago. So that was that took a little hit on the bond market, but I still think that the bond market, first of all, has come out to the seasonal period. It's really sweet spot to the seasonal period as well. So if you take a look at the seasonal sweet spot for bonds, it's really August and September. Those are the 2 months when bonds tend to do really well. So we're coming up to that period, and yes, the Federal Reserve, it looks like 82% probability that the Federal Reserve is going to raise interest rates, but at its next meeting. But that's already priced into the market.
It can get baked in. That's right.
Yeah, exactly.
So I'm going to hit you with one that you didn't know I was going to ask. So, emerging market bonds. You probably didn't. You weren't prepared
So
for
emerging market bonds.
Like they're breaking out. Like technically they look like they're just starting to break out. Now it's really early, but I'm looking at the chart. So I'm just curious about the seasonality.
Yeah, so emerging market bonds. So the emerging market bonds are sort of like quasi-bond, quasi-equity a little bit, right?
And currencies too.
Yeah, and currencies. So you got the whole thing in there. And emerging market bonds, if we've got the US dollar falling, that would be positive for emerging market bonds. Absolutely, there's no question.
Yeah.
But I do want to say, if we do see some volatility in the market, that could be a little bit of a risk scenario for emerging market bonds. It's possible.
Right. Yeah, it's probably not a trade for the meek and mild, but and honestly, it hasn't broken out from my perspective as a pretty pure technician. I haven't seen enough evidence of a proper breakout, a prim and proper breakout on the chart, but there's some evidence, and that's why I'm asking you now. So,
Yeah, Keith, I'm gonna be honest, I haven't done enough seasonal work with bonds, emerging market bonds, to say that there's what I see as a definitive seasonal trend right now. You might have done some work yourself on that. But I imagine right now with the US dollar going down, that emerging market bonds will be benefiting.
Yeah, they're obviously. So, okay, one last thing that we were going to talk a bit about, and we both kind of look at this stuff, even though you're a seasonal guy, I'm a technical guy, but there's kind of some cross area within technical analysis, and that's sentiment. And I mean, you and I both watch things like the VIX. We look at things like the put to call ratio, that kind of stuff. You know, what do you think of, you know, you've studied the VIX enough, you know, like 12, 13, you're starting to get into that complacency area on the VIX. And we've been kind of bouncing off of 13. We haven't hit 12, but we've been hitting 13 pretty regularly, literally for the past month or so. You know, what do you think about that, Brooke? Like, do you have any comments on that?
Yeah, well, yeah, it's kind of crazy. The VIX has gone so low. There might be some reasons for it. I mean, the VIX measures is a fear gauge. It can measure complacency in the market as well. We do have one-day options trading right now, a huge part of the options market. And given that the VIX is calculated off of 30-day S&P options, now we got these one-day options being traded so heavily that would skew it a little bit. I think that's an influence. But look, you know what? If you look at seasonality says that typically the VIX goes down until, guess what, mid-July.
Oh, there you go.
And then it starts to pick up. It keeps going higher and higher into October. And I know from 1990 to 2021, from early July to early October, the VIX has gone up 72% of the time.
So there you go. See, I just learned something new. That's why I ride with you. It's not because I like riding with you, it's because I want to pick your brain. See?
Well, truth be told, Keith, when we ride together, he can absolutely kill me. So he's quite the rider.
One, two, three, go. Okay, so Brooke, we talked about a couple things that concerned us. Like we were concerned about market breadth that is improving but isn't near reaching a passing grade. We talked about sentiment. We talked about the VIX being kind of low. Some of the other stuff I look at as a sentiment specialist is reading complacency levels, and that's never good for a sustainable market. But let's talk about some of the positives. So, you know, what are some of the things that you see as opportunistic coming out of maybe the end of the bad 6 months and you know, some of these other factors we talked about?
Yeah, so, you know, we did talk about a couple of opportunities. There's a lot more sector opportunities right in this time period as well. But, you know, I talked a little bit about the danger zone, August and September being weak, typically. But if we do see a correction in the market, I think that could actually be a great opportunity for the market. So yeah. It's not like the world's falling apart and, you know, everything's going to end. This, right now, is all about risk-reward relationships. And right now, on a seasonal basis, it's not strong. And given all the other headwinds, it's not a great place to step on the gas pedal.
Yeah.
But if we do see correction that happens, let's say in September, when corrections often do happen, then that might be a great opportunity to actually step in and to step on the gas pedal at that time. So it's not all doom and gloom.
Absolutely. And you know, I might add for my bit of a positive finish is that I have been watching those sectors that had not been participating in the market for the past 6 months. And like I mentioned, they are starting to emerge. I hope that they will continue doing so. And if they do so, for any of us that kind of focus on those overlooked sectors over the coming summer, we may just see a pretty good rotation into some of these sectors, because when the techs take that back step and finally settle out some of their overbought conditions, what's going to happen is money's going to move into some of these overlooked sectors, and there could be a massive opportunity when that happens, and that, I wouldn't doubt, will happen in line with the seasonal patterns of weakness into the fall and then opportunity after that. So the next few months could be an awesome opportunity to start picking away at positions that really are unloved value stocks.
No, Keith, I think it's all about opportunities coming up in any possible downturn that we come up with in the near future. So why don't we end that on a good note and a happy note and looking forward. And well, it's been great coming out for a ride.
Yeah, great. So Brooke, we're getting faster and faster as we go down a hill, I noticed. So we'll end with that before we end up in a fiery ball of flesh and bones crashing, okay?
Okay, sounds good, thanks.
Okay.